Now, we got a lot coming up this week. We got the FOMC meetings from the Fed coming out. That's going to tell us what the interest rate hikes are going to be. We got GDP numbers coming out on the 28th. That's going to tell us if we are officially in a recession. Now, what am I expecting to happen, and what do I think would be good for the market? Let's get right into that. My name is Josiah, and I trade stocks and cryptocurrencies for a living, and if you're following along with me, I'm here to teach you how to do the same. So, FOMC meetings are going to be this week. A lot of people are starting to expect a 100-point rate hike. Now, I don't believe we'll get a 100-point rate hike, and this is why. The Fed knows that giving a rate hike doesn't instantly change the CPI numbers. They put out a 75-point rate hike, and they know that they need to leave it alone. It's going to take a couple of months to start working. I think maybe later on down the road, when everyone's already not going and borrowing money right now because the interest rates are climbing. Nobody wants to pay those higher interest rates. 6 months down the road, when people are like, okay, this is the new normal, and they start going back after them loans, that's when the Fed needs to come out and smack everyone on the hand and say, no, I said don't touch that. So that's when I would expect a rate hike. I do believe that the 9.1 that we had for inflation last month, I do believe that's potentially peak inflation, and that we're going to start seeing inflation coming down, which is going to allow the Fed actually to get off the gas just a little bit. Now, GDP numbers. What's going to happen with GDP? A lot of people's already saying that's going to come out and confirm that we're already in a recession. I hope that the numbers come out and confirm that we're already in a recession. And before I get a lot of haters saying, that's not very good, we don't want a recession, we don't want it. If we can get the numbers that say we're already in a recession, that means we've been in a recession for the last 6 months, and we're potentially on our way out of that recession. If we get the numbers in and it says that we've not been in a recession, I think it's only going to add fear into the market, and people are going to start wondering, well, when is the recession coming? So if we can get the GDP numbers and it shows that we have had negative GDP and that we are officially in a recession, I think that's the best thing that we could have happen to the market right now, because it's going to let everybody know that we've already hit that recession point and that we're potentially moving out of it. Let me know what you think in the comments below, and remember, be blessed, and until next time, never trade with your emotions, always trade by the numbers.